The new US administration is changing direction in several policy areas, with trade being a focal point. As a result, uncertainty about the future path of trade policy has soared to exceptionally high levels. Now, you have an interesting chart on the back of the 2 pages, which is this one in the left-hand corner, which gives you the trade policy uncertainty index. And it's really worth having a look at, comparing in particular with the uncertainty that we had during COVID, for instance, and what we're experiencing and the speed at which it has developed over the last few, not months, but weeks. So in our world, increased trade frictions are detrimental to global growth and welfare. They raise costs, they disrupt production, and they often lead to an adjustment of supply chain. This also encourages tit-for-tat retaliatory policies, further undermining the benefits of free trade. The euro area, which is very open to trade and deeply integrated into global supply chains, especially with the United States, is particularly exposed to shifts in trade policy changes. As regards the impact of specific trade measures, the situation is, of course, evolving almost on a daily basis. As a result of that, any estimate that we give is subject to maximum uncertainty. Our analysis, I was going to say at this point in time, suggests that a US tariff of 25% on imports from Europe to the United States would lower euro area growth by about 0.3 percentage point in the first year. A European response in the form of raising tariffs on US imports would further increase this to about 0.5 percentage point. The brunt of the impact on economic growth would concentrate around the first year after the rise in tariffs. Leaving a persistent negative effect on the level of output. In such a case, the inflation outlook would become significantly more uncertain. In the near term, EU retaliatory measures and a weaker euro exchange rate, resulting from lower US demand addressed to Europe for European products, could lift inflation by around 0.5 percentage point. The effect would ease in the medium term due to lower economic activity, dampening inflationary pressures. But let me again stress that these estimates are subject to very high uncertainty, given that the impact of tariff increases may be non-linear, for instance, due to a significant reconfiguration of global supply chains. Now, of course, the high level of policy uncertainty requires us to remain vigilant and ready to act to protect price stability. Crucially, the answer to the current shift in US trade policies should be more, not less, trade integration, both with trade partners around the globe, but also within the European Union. Trade integration, including free trade agreements, has been a driver of economic prosperity and can protect against unilateral trade measures. In fact, let me mention some ECB analysis that we have conducted recently. It indicates that closer integration with the rest of the world, so that means excluding the United States, could more than offset the losses incurred from unilateral tariffs, including retaliation. So the consequences that I have mentioned as a result of the tariffs and the retaliations could actually be offset by this further and deeper integration with the rest of the world. So it is important that the EU remains open to trade and swiftly finalizing recent trade agreements with other international partners, because that would be also a powerful signal. We must also use these developments as a catalyst for deepening trade between European Union member states. The single market is estimated to have added between 12 and 22% to long-run EU GDP in its first 30 years. and the level of trade between member states has doubled since its integration. A deeper single market is crucial for reducing trade barriers within Europe and creating the scale so necessary for firms to thrive. In addition, the more we exploit our own market, the more resilient Europe is to the impact of global fragmentation and external shocks more generally. With its competitiveness compass, the European Commission has put forward a concrete roadmap that should be urgently implemented. In this context, the plan for the Savings and Investment Union presented yesterday is another crucial step. By enhancing our strategic autonomy and increasing our economic clout, Europe negotiates with trade partners from a position of greater strength that can only be harnessed and benefited from collectively. At the ECB, we will continue to carefully monitor global trade developments and take their impact into account in our monetary policy deliberations. In the current environment, it is important that we anticipate and assess implications of the potential trade policy changes.